Hi, gentlemen, ladies, gentlemen. Hi. All right. Thank you very much for joining. Um, we would like to wait a bit, maybe 10 more minutes, but not more than 10 minutes. Okay, 7 more minutes. We have already waited for 3 minutes. 7 more minutes to have other people join us on the call, and then we will kickstart. Thank you for your patience. Thank you. Sorry for that. Thanks. So, ladies and gentlemen, thank you so much. You are welcome to today's summit. Our summit is the maiden version, so it's the first of its kind. And I promise it's across my chest, and I promise it's going to be explosive. All right. So I enjoin you to stay connected, stay tuned, and be engaged. Avoid all distractions, and we will soon be taking off. In a couple of 2 more minutes, we are taking off. Thank you so much for your patience. All right, ladies and gentlemen, thank you once again. Thank you very much. I think you are not late because we've been pretty waiting patiently, and we're going to take off right away because we have got a good number of participants on the summit. So we're going to start off while others will join us. Thank you very much once again for joining. I'm your host on this summit. My name is Jaffa Jeff, and I am the convener of Stock Diary Investment Club, London. Um, it is my pleasure to welcome you to this summit today and to share knowledge with you about the year ahead, which is the 2025. I think it's a good practice because you don't make wealth by accident. Wealth is a creation of thorough planning and strategy. So when you prepare, you plan, you strategize, and then you execute your strategy, then you are definitely going to make wealth. That doesn't mean you're not going to have some challenges or suffer setback. There are going to be challenges, there are going to be setback. All right. However, your chances of making wealth are usually magnified and become bigger than if you had sat and waited for accident to happen, what I call accidental wealth. Accidental wealth, the probability of accidental wealth is almost less than 5%. Yes, it's less than 5%. So if you want to be among, they call them lucky, they say lucky, I'm lucky, or he was lucky, or she was lucky. You want to sit and wait to be among the 5%, you could see that the chances are that you will not, and you may never be among the 5%. But then the chances of making wealth by planning and executing your plans are over 90%. Yes, 90% of people who have planned and executed their plans have actually achieved and become worthy. And that's why I am congratulating you for choosing to be among the few um, who have chosen this approach to wealth creation, to commit to learning and implementing what you are learning, the skills and the knowledge you're going to pick up from here, you go and implement it in your financial plans, in your goals and investment plans, and then you will see the chances of making wealth amplified for you. So welcome very much. So let me share the agenda for today so that we can quickly know and be guided accordingly based on our agenda for the day. I believe you can see my screen. You can chat with me. So if you could see my screen, just drop a yes via the chat box. And we know that, yes, we are in sync. Just a yes via the chat bot and a chat box, and that will be fine. So I'm looking at the chat box to see a yes. So if I see a yes on the chat box, I know we are all connected. So I've shared my screen right now, and I do hope that you could see the screen. All right, fantastic. I could see yes, yes, yeah. Okay, good. So it means we could all see the screen. Yeah, thank you very much. Thanks. Thank you. All right. Once again, welcome to the Global Retail Investor Summit 2024. It's my pleasure to welcome you. I remain Jaffe Jeff Sima, and I'm your host on this event. It's my great pride and excitement to host you today. So here is our agenda for today. We're going to start with a welcome note by the convener, that's myself, your host, and then we're going to look at sizing the global wealth opportunity. That's our first discussion topic. And then the second discussion topic will be investing in stock market for beginners. And then our third topic will be our 2024 stock investment scorecard. And then the next topic will be winning investment strategies, where we will learn the strategies, and then you can choose one strategy you want to stick to. And then investment themes for 2025, and then our Q&A. All right. So we're not going to waste time. We are going to take off right away. Yeah. Others are going to join us subsequently. Yes. So the welcome note, I really want to welcome you to this maiden event of the Global Retail Investor Summit 2024. I'm deeply honored and excited to convene these events today and have you all in attendance. We have people who joined across continents, others from North America, Asia, Africa, Europe, and the UK are all in attendance. It's a great honor and privilege to be your host today, and I'm deeply humbled. As a professor of finance and a finance practitioner who has spent over a decade of my career in the field of finance, I understand the important role that finance plays in enabling people to achieve their dreams and goals in life. And it is based on this philosophy, the idea that people need the knowledge of finance, they need access to finance to succeed and achieve their other dreams. There are so many dreams, whether it is a dream to buy a house, it's a dream to drive a good car, it's a dream to send your children to the best of the schools, it's a dream for that vacation, it's a dream for that good quality life you have always desired. All of this will not be possible without a good, solid financial source or income. So it is based on this that I set up platforms to create the knowledge of finance and share knowledge among communities globally. And I created a community of retail investors called the Stock Diary London. And that was a year ago, or less than a year, because that was basically in February 2024 when the community started operations. And the community has grown to over 300 members today who are learning, investing, and making money. Today, I am convening the first ever in the world retail investors Global Retail Investors Summit. This is another platform to share knowledge of finance with as many people who desire that good life and want to have access to the financial markets and make wealth from it. I congratulate you for being here and being a participant on this summit today. Accept my congratulations. And I strongly advise you to be attentive, ask questions, learn life-changing financial skills that can boost your incomes and help you to achieve your life dreams. On a final note, I really want to advise you to practice and apply the skills you have learned by taking actions immediately. Take actions immediately you are leaving here. Don't wait. All right? Don't wait. Thank you. And buckle your seatbelts as we delve into the world of investing together. Jaffa Jeff, your humble chief host. Thank you. So that's the welcome note. And I'm moving into the next item on the list, which is sizing. We want to know the size of the global wealth opportunity. I call the global capital market, the financial market, I call it a global wealth opportunity. That's my own coinage. So I just want you to know that when I say global wealth opportunity, I am referring to the capital market. That's what we're referring to here, the global wealth opportunity. So the global capital markets, every country in the world has it. So there's no excuse. Nobody should say, I don't have access, or I live in a country where there's no capital market. There's capital market in every country of the world. There is a stock market. I think what people don't have is the knowledge, and this kind of platform, I have set it up to break that knowledge barrier and grant as many people, as millions of people, access to that knowledge that they need to take their destinies in their hands and begin to invest in the capital market. Yeah. So let's move to that event quickly right now. The global wealth opportunity. I still believe you can see my screen. Please, I want to see a chat to be sure you are seeing my screen and we are together. If you can see my screen, say yes, please, so that we know that we can all see each other. Okay, can I see yes? Yes, yes. I could see yeses. All right, thank you very much. I could see yeses. So you could actually see my screen. Thank you. A bit off. All right, you could see my screen. Thank you. So the global wealth opportunity, we're trying to size it. What is the size of the wealth in the capital market globally? It's good to understand this context, all right? Because when you understand the context, you are more likely to seize it, all right? To seize the opportunity, as our theme implies. Because if you don't understand the context, you will not be able to appreciate the opportunity that are ahead of you, and therefore you will not be able to seize such opportunity to make use of them. All right. So it's good to appreciate what is available so that you will be able to capitalize, take advantage of it. If you don't know that something is available, you will not even have the plans to make use of it, or you may not be able to make use of it. So you first need to know that there is wealth all over the world, and that wealth is in the capital markets. All right. So hence this sub thing, sizing the global wealth opportunity. So I have a chart here before you, and this chart is a representation of the global equity market worldwide. So the global equity market worldwide as at 2024, it's about $115 trillion. That is massive. $115 trillion in the air. That is the size of the global equity market. So global equity means shares, it means stocks. So it's the same name, same term. So we are going to be using it interchangeably. All right. So it is a very big market. It is huge. It is massive. And it is made up of the shares of companies, the stocks of companies. All right. Issued by companies. That's what you need to know at this stage. We're going to go into that session later to learn the common terms you can use while investing in shares or stocks. So the US market represents 42% out of that $115 trillion. The United States has the biggest global equity market. Look at it here in the blue partitioning of this pie chart. Yeah, pie, not bad, pie chart. You could see that. So, and then, so in this blue, you have Canada. Canada, it's a small market with about 2.7%, but it's in the same continent. That's North America. All right. And then right in the yellow, you have European Union and the UK. So Europe commands 11% of the $115 trillion market size. That's the amount of money that is available globally in the stocks that you could participate in. All right. So in Europe, 11% of that money is in Europe. And in UK, 2.9%. The UK stock market is about 2.9%. All right. So the US, the most important point you need to know is that the US is the biggest, the US has the biggest stock market in the world. So you have to hold on to that. So if that is a lesson you learn in this session, that is great and cool. That, oh, the US stock market is the biggest in the world. And you could see that you could actually trade the US stock market, even if you don't live in the US. So we're going to let you know that later on this summit. And then here is Asia. The orange partitioning is Asian markets. So in Asia, you have China has a higher share with 10.6% of the global equity market. The money in stocks, 10.6% of that $115 trillion resides within China. And then you have Hong Kong has 4% and Japan has 5.4%, right? So you may be asking, oh, you might be from Africa and you're asking, how about Africa? All right. Yeah, African market, you may are from India. You're asking, how about India? So basically, African markets and Indian markets are called emerging markets, okay? Other emerging markets. So, and that's where they are about 9.2%. Emerging markets includes India, South Africa, Brazil, Nigeria, and the rest of other countries from Africa. So they represent 9.2% of the wealth is in those countries. And then finally, you have other developed countries that contribute to that global wealth, okay, 9.4%. Other developed countries like that are not in the EU and are also not in North America and not in Asia. So you have countries like what's the country? Austria. You have countries like so the couple of countries they don't really are not mainstream European countries, and though some of them are trying to join the EU of recent, those countries within the Baltic region that are not EU member countries. For example, Russia. Russia is a developed market. It's here, other developed market, but it's not part of the EU, okay? So those are the other markets here. All right. So This wealth opportunity is everywhere in the world. As you could see, it's everywhere. Everywhere you have the wealth is there. So ignorance, the problem why people don't access the wealth is ignorance. Okay, people are ignorant about the presence of this wealth, and therefore they struggle to gain access to the wealth. They don't even know that the wealth exists. Many people don't even know that the value of the money that is in the air, that they could possibly just take a portion, just cut a portion of it and live a comfortable life. Just cut a portion of it, gain the knowledge and go implement the knowledge and just take a portion. Don't be greedy. Take just a portion of it and live your comfortable life. And that's it. And that's what this summit is all about. It's all about. So the major bane is ignorance, right? People are ignorant about what is happening. That's the problem. So I didn't mention money about ignorance. I mentioned ignorance, I mentioned fear and myths. These are the three factors that block people, the barriers, lock people out of the global wealth opportunity, the global capital market. These are the barriers I have mentioned based on my experience and my relationship and talking with people. I notice ignorance is number one. The biggest barrier is ignorance. They don't know. People don't know. Okay? It's not their fault. They don't just know. Only few people know. And then fear. And then some people know, but they're afraid. They're afraid that, oh, I will lose my money. I heard this. I heard stock is risky. If you invest in stock, you lose your money. So fear holds them back. And then myths. And then there's some myths around other beliefs that, oh, companies are thieves. Companies that issue those stocks, they are unscrupulous, they are these. So all of these myths, they hold people back. There are a constellation of forces that restrict people, restrain them from accessing this wealth. I deliberately did not mention money here because you can now invest with $1. Even with $1 of investment every week, every month, you can invest just $1. Not $2, $1, you can invest. You're going to see those platforms that you could use later. Now, every country has this opportunity, right? So I just sized a couple of countries here. The size of the market in the US, we have said it, is over $25 trillion. That's the US market. The UK is about $4 trillion. South Africa market, back to Africa, it's about 500 billion. That is the size of the market. The India market is about 350 billion US dollars. And the Nigerian market, it's a small market with about 50 billion US dollar, but that's still massive. All right. And it's growing. So it's still a massive market. So there is no excuse. You just have to have an investment account. It's just like not having a bank account. That's the way I'm seeing it. It will be weird to see somebody who doesn't have a bank account. Now you need to have an investment account. The way you have a bank account, you must have an investment account as well. All right? And you're going to learn how to do that in this summit. Thank you very much. We're done with that session. That's all about sizing, understanding the size. Oh, $115 trillion. If that's the lesson you have grabbed here, take it home. There is $115 trillion in the air that I could actually cut my own portion and live a comfortable life. All right. So I just take that lesson home. And secondly, the US represents the biggest of that money is resident in United States of America. Yeah, about 42% is there in the US. Thank you. So that is the end of that session. And I believe you are picking the lessons from each session. I segment it so that we could make the learning embark on a micro learning in small pieces. Yeah, basically, just not learning too much, but pieces. And then at the end of the day, we would have compounded the knowledge. We could compound the knowledge, but we will start with small piece, chunk knowledge pieces. That's the approach I understand, I believe could work better for us. So the next on our agenda is basically we want to now move to the next item on our agenda. And we have got investing in stock markets for beginners. This is very important. This is the most vigorous and rigorous session on this summit because I know I want to be talking to everybody as if you are a beginner. You have never invested before. Therefore, I am putting a lot of time and energy into this session, investing in the stock market for beginners. All right. So, ladies and gentlemen, let's start. Let's commence the journey into this session, investing in the stock market for beginners. You're a beginner. You want to start your first baby step. You want to take your first baby step. You are in the right place. You're on the right summit. All you need to do is just pay attention and be passionate about learning. I'm more passionate about implementing what you're learning here. That's the key. These are the key. Practice living what you are learning here. If you don't live it, don't go and implement it in your finances, in your personal finances. It's going to be a waste of time. So I hope you will not make it or allow it to be a waste of time. All right, so investing in the stock market, I'm going to start that session right away for beginners, for absolute beginners. So may I ask you if you can see my screen? Can you send me a yes? Just a yes in the chat box there so that I could know that we are all aligned. Just a yes, a yes, a yes. A yes on the chat box and that will be fine. All right, I could see a yes. Could see a yes. I want to see more yeses here in quote. All right, thank you. I could see yes. All right. So I believe we are all together and we could see my screen clearly. Yeah. So excuse me a minute. I want to bring people on Facebook quickly here. Quickly. See, can bring people on Facebook here. Facebook. What is stream now? Facebook. Don't get that. Couldn't catch it. Let's leave that. Couldn't catch. Okay. So let's start investing for beginners. So there's always a starting point. We have all started at a point and then have grown to become experts in our various fields of expertise and professions. So also you could be a beginner in stock market and start learning today. Also, what are stocks? Can you see that basic I'm starting? You'll be hearing the word stock. What are stocks? So stocks basically represent ownership in a company. Stocks mean shares. They are called shares. So you see, I've been using the word shares and stock and equity. These are the three words we use to call the same thing. They are synonyms. Equity, stocks, shares, synonyms, they are the same. So when we say stocks, they are just the shares of a company. You divide the company into smaller units. Those smaller units are called shares. And they represent ownership. Anybody who owns one of the shares, the units, which is a share, becomes an owner in the company. That's all you need to understand about, oh, what is shares? It's just ownership in the company. So when you buy a stock of a company, you become the owner. You become a part owner in that company. If you buy today, you become part owner. For example, I am an owner in GT Bank. If you live in Nigeria, you should know GT Bank. I am an owner in GT Bank because I own the shares of GT Bank in my portfolio. I am an owner in NVIDIA. If you hear about NVIDIA in the United States, because I own the shares of NVIDIA in my portfolio. So any company that you own the share of it, then you are an owner. You are part of the owners of that company. That's all you need to know about the meaning of stock. So when you become an owner in a company, you are called a shareholder. So shareholder. So you'll be hearing shareholder in our conversation. And this is a very important language in the stock market. And since you want to join the Global Wealth Club, which is a stock market, you need to know the language. So shareholder. The shareholders are the owners in the company. So what's the reward of investing in stocks? What's my reward if I invest in stock? What's my reward? So the first, I have put here three rewards or three benefits of investing in stock. Number one, it's ownership in the company. As we have said, it gives you ownership. You are a part owner in that company. Part owner, because you are not the full owner, the whole owner. You own just a part of the company. Another shareholder owns another part. You could see I've started using the term shareholder right now because we have learned it in the last slide. And that's how this training and conversation is going to be building on what you have learned in previous slide. Take it up, take it up, take it up until we finish building the whole house, and then we will roof it. Great. So you become an owner in a company. That's one. Number two, it gives you opportunity to make long-term wealth creation. Long-term wealth, yes. All the rich people in the world, the richest men in the world, they make their wealth from stocks. And their wealth is still in the stocks of companies. If you want to mention Warren Buffett, Warren Buffett is the biggest shareholder. Yes, one of the biggest shareholders. He's a shareholder in most of the big companies in the world today. I want to mention Elon Musk. That's the richest man currently, right? Worth over $400 billion. His wealth is principally about stocks, shares in a company called Tesla. All right. So it gives you the opportunity to create wealth if you begin to participate in the stock markets. You have the opportunity to create wealth, to make wealth for yourself and for your children and for your generation. Yes, absolutely. And the third benefit of investing in stock is it gives you income. It gives you constant income. You could make money constantly. You could make money monthly. You could make money weekly or in 2 weeks' time, depending on your strategy. We're going to learn it here. All right. So these are the benefits of investing in stock. And then you could have access to dividend. Companies distribute their profit every 6 months, quarter, either quarter or half year or yearly. You will receive a portion of that profit. It's all part of the income. Or you simply be a trader instead of an investor. You buy good companies that has good momentum and you sell when the price increases and then you make money. Yes, you could potentially make a lot of money through that strategy. So you're going to learn it here too. Now, there are risks. So don't say I never told you. There are risks as well. All right, don't mind me. So there are risks, and this is one of the things that causes fears. People fear the market. Oh, market is falling. They coin all kind of frightening descriptions. They say, oh, bloodbath, oh, blood in the streets, oh, this. I will just be laughing. I will be laughing at them because when they're seeing blood, I'm seeing worse. All right. When they're describing using horror to describe what is happening in the financial, in the stock market, I'm seeing opportunity to make worse. All right. So here are the risks of investing in stock. Number one, market volatility. All right, the market could be volatile. Volatility means the share prices are never stable. They don't sit in one place. You buy the share today, and then you come back tomorrow. In the next 1 hour, the share price may go down, and your money may be your money may be no, your money may be, the value of your investment will reduce, and then your heart will start panting. Oh, I'm losing money. You're not losing money. It's just the nature, the behavior of the stock. The stock is never stable. The stock keeps going up and down, and that's a risk. So that risk, we call it market volatility, okay? The movement of the stock price up, down, is described as market volatility. The next risk, another risk you may face is inflation, all right? There are some companies that inflation affect them badly. So if you buy the share of the stock of that kind of company, inflation will affect them badly. Either their product will become overpriced and then customers will not buy and then they will not make profit. And then when they don't make profit, their share price will fall or decrease. Maybe you bought the share for $1 and then the share price decreases to to 40 cents, at $0.4. And you bought it for $1. You see that? That's the risk we're talking about. So, so there are some companies like that inflation is bad for them, but there are companies that inflation is good for them as well. You're going to know that here. And then there's another risk called company risk. The company has a risk. The company may go bust. Yes. You know companies that have gone bust in your countries. You all know them. Yeah, you know them. In the world, last year, 2023, there was a bank called Silicon Valley Bank. It went bust. Went bust. There was another big global bank called what? It went bust here in London. They're everywhere in the world. It went bust. Here in the UK, it went bust. So company risk, the company you buy their shares can go bust. Okay, so that's another risk. So just beware that these are the three risks. But then, is there a solution to this risk? Yes, there is a solution. And that's why you are here to learn the solution so that you will pick companies that will minimize this risk, will reduce this risk for you. All right. So your companies that you're going to pick will be companies that will reduce this risk. I want you to understand some terms. There are some terms that are commonly used in the stock market. And I really want you to, I will appreciate it if you understand these terms because they will help a lot in your dealing, in your investing life. These terms are really going to help. Yeah, they will help. So, what are these terms? Let's try to understand the terms. The terms in the markets, we have terminologies, the common language, our jargon, all right? Our jargon in the capital market, stock market, you need to understand them because it's very good for you because when you want to open a stock account with a broker, the language used on the broker platform is all written in these terms. So if you know the terms now, you acquire the knowledge of the terms now, when you go to that stage later, it will be easier for you. Okay. So let's understand these terms that are commonly used in the stock market. So here are the common terms. Number one is stock market. We've been using that term already. So a stock market is electronic platform or website that people are allowed to buy and sell stocks. That's my definition. It's my own definition of stock market. Because stock market can actually be a building. But hey, most stocks markets are no longer buildings. They are just a website or a platform. People jump on the website to buy and sell shares. That's a stock market. And it's called an exchange, stock exchange, stock market. That's what you need to know about it. So when you hear stock market, it's like a website for buying and selling shares. All right. Some people say, no, 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 I don't want to put my money on the internet. I don't know then whether they have an office or not. Sorry. Most companies, most stock exchanges are platforms, websites, and most brokers are platforms and websites. That is the life. We're in the 21st century, and therefore we have digital stock exchanges, meaning everything is on computer networks. Most of the transactions are on computer network. All right. Another good terminology or term you need to know is main stock exchanges or markets. So you have to have a knowledge of the main stock exchanges, because you know that there are over $115 trillion of money in the air that you just want to cut a pie. Take a pie of the pizza, your own pie, a piece of the pizza, right? Just a piece, just cut a piece of that pizza. You want to cut a piece, right? So that piece of 115 trillion, here are the common markets. You have the main stock exchanges, you have London Stock Exchange, you have Nigeria Stock Exchange, you have National Stock Exchange in India, you have NASDAQ in the US. NASDAQ is actually the second biggest stock market in the world. Stock market, we know the meaning of stock market now, so I can use it freely. Stock market in the world. Then you have New York Stock Exchange in US. New York is the biggest one in the whole world, followed by NASDAQ. So you could see that the two biggest stock exchanges are all domiciled within the United States of America, the US. So that underscores the US as a global powerhouse. It is the global capital market of the world, the US, and then followed by London. Okay, so you need to be aware of this, that there are stock exchanges in this country's stock markets, and the biggest one is New York Stock Exchange. Then you have stockbrokers. Who is a stockbroker? It's a good term that we're going to be using seriously here, and you must get accustomed to. A stockbroker is an approved agent that the government of a country, in that country where you live, the government must give somebody, an agent, a license to be opening investment account for people like you and me. Yes. Because you cannot invest in the stock market except a broker helps you to do so. You cannot invest in the stock market except you contact a broker in your country, and the broker helps you to create an account. All right. So the broker will help you to create an account. That's it. So take note of that. If you want to buy, you will send a broker to the market. The broker is the only authorized and approved agent who can go to the stock market to buy and sell shares on your behalf. Please take note of this. Very important. Oh, stock price. What stock price? Stock price, the amount you pay to buy the stock or sell the stock is what we call stock price. Stock price broker, we're going to be using these terms very often. So please take note, because these terms we will be using then are considerably high here. Broker and stock price. Okay, market capitalization. Market capitalization. All right, so market capitalization is just the amount that shows the monetary value of the company. So every company has a value. They have monetary value. Oh, the value of the company on the capital market. What is the value? $20 trillion, 10, 3 trillion. There's no company that is up to $20 trillion. Right? The biggest company is about $3.6 trillion, and that is Apple. Then you have, so that's a company that has the highest market capitalization. So market capitalization means the value of all the shares of that company on the stock market. We're seriously using our jargons now. So get ready. Yeah. So on the stock market, you have a market capitalization. Every company has a value placed on it. And the total value of that company on the stock market is called market capitalization. So we usually calculate it by the stock price of that company times, you know what stock price is, times the number of stocks, times the number of shares the company has sold on that market. If the company sells 1 million shares and the stock price is $5, the market capitalization will be 5 times 1 million. And that will be $5 million. That will be the market capitalization of that company. Very simple and straightforward. Thank you. Dividend. Now, dividend basically means the amount of profit. The company makes profit, they have to share that profit to the shareholders. You are a shareholder. You see, we're beginning to use our terminologies right now, shareholder. So the company will take a portion of that profit and distribute it around all the shareholders. That is called dividend. So we'll be using dividend subsequently. Or EPS, please, I want you to take a pen and write this one down. EPS and PE ratio. Even if you are an experienced investor, you need to write this one down because it's something very powerful, and I use it very well to tell you. If I use this to combine, I can tell you that don't buy the stock. And if you buy it, you lose money. I can tell you buy the stock just by using my PE ratio and EPS strategy. So I'm going to teach you here. You're going to learn it. Just relax. So EPS. So EPS means earning per share. So it is the profit that the company has made during the year divided by the total number of shares. For example, if the company makes a profit of let's say $1 million, and the company has a total of 1 million shares, the EPS will be $1 million, which is the total profit divided by the 1 million shares. Okay? And the answer is what? $1. So the EPS is $1. Clear? That's clear. Good. P ratio. What is P ratio? Nothing is hard here. I'm making it everything easy. Just have a mind to learn. P ratio. What's P ratio? So basically, the P ratio means it's a number that shows how much investors are willing to pay in order to participate in the $1 earning of the EPS. So I'm going to use EPS to define my P ratio. They are highly connected, okay? This and this they're seismic twins. They're twins. They're inseparable. I love them. EPS, P ratio. So your EPS and P ratio, you can use them to create turning points, transformational trading strategy, investing strategies. Yeah. So P ratio basically is a number that tells you how much are the shareholders paying for each of the $1 EPS. $1 EPS. How much are they paying for it? That is the job of a P ratio. The P ratio will help you to know if the company is overpriced. The price of the company is too much. The share price is too high. Don't buy. Or the company is underpriced, cheap. The share price is very cheap. Then buy. Because any company that is selling, the share price is cheap. Ceteris paribus, barring other situations, just be buying the stock, and you will smile. You will celebrate in wealth. Yes, but I said other things being equal. I ceteris paribus, as the economy, people who study economics will say. Yeah? Those other things being equal, yes, they can happen, but you have been able to create a strategy that reduces your chances of losing money. You have amplify your chances of making money when you follow this strategy. All right? Great. So the next terminology is stock index. Hey, how about stock index? You say, oh, stock index. So our index is just a number that represents the market capitalization of all the stocks. Every stock, all the stocks listed on that stock market. There is a single number that represents how well or how bad the share prices are doing. Are they increasing? Are they going down? Your stock index tells you that. Just look at the stock index and you will know whether the whole market is good or is bad. Stock index. So stock index is a good term for you to hold your hands onto. Yeah. So these are the terminologies, ladies and gentlemen. Stock index. Please, we're going to be using stock index, EPS, P ratio. So hold your hands on this. They're very key. Now, I say choose your turf. You have to choose your turf. Your turf. Choose your turf. Let's know where you belong. Which kind of investor or trader do you want to be? Because there are only two ways to invest. There are two types of people in the investment market, in the stock market, two types of investors. You are either a stock trader or you are a stock investor. So you have to choose your turf. Choose where you belong based on your objective. What is your financial objective? What's your dream? Is your objective income? You need weekly income. You need monthly income. You want the stock market to pay your salary. Is that what you want? That will ultimately determine whether you will be a stock trader or you'll be a stock investor, or you want to build wealth. You want to just be growing wealth. Just become wealthy. Your own is future. You are more concerned about future. You are not concerned about now. You can hold your stock, buy and hold your stock for a long time. Then you are a stock investor. But if you don't want to buy and hold for a very long time, for 5 years, you just want to buy now and then watch the market, the price, we increase next week, we increase next month, we increase next 2 months, and you sell and take the profit and generate income, constant income, then you need to be a stock trader. So this is your decision that you're going to make. What's your motivation of coming here? I want to interact with you on the chat. Can you chat and let me know your motivation? Why are you here? If I know why you are here, I would likely know that you are either going to be a stock trader or you're going to be a stock investor. So let's go to the chat. Let's head to the chat quickly. And no. So let's head to your chat. So on the chat, just in one word or 2 words. Okay, you want to be a stock investor? Yeah, that's rather want to be a stock investor. Yeah, you want to grow wealth. All right. So that's an investor. You're definitely going to be an investor. Okay, I have let you in. I think I have let everybody who is on the waiting in. Have I? I think everybody's in now. Everybody's in now. Yeah. Everybody's in. Okay. So everybody waiting is already in. Okay, so let's interact on the chat quickly. Yeah, all right, thank you. Thanks, Bio, thanks. Welcome. All right, to grow wealth. So let me know your motivation, why you are here. And we can know whether you're going to be a stock investor or you're going to be a stock trader. That's where it starts. Because if you define what you want to do, then you're going to be successful in this space, okay? Because everything you are doing is going to be geared towards achieving who you want to be. Yes, that's it. All right, short, long-term wealth. Yeah. All right. So this is incredible to know. I can see that we are more skilled towards long-term wealth more than being short-term traders. Which is good, which is really good because there are benefits Yeah, a blend of. Okay, somebody wanted to be a blend of. You want to be a hybrid. Abudu, you want to be a hybrid. Play both legs. Be a stock investor and be a stock trader. That's good. You could actually do the two. Depends on how you are able to strategically allocate your capital. If you have a capital of $1, you can allocate your $1 accordingly. Yes. All right. Thank you for sharing your decision about the kind of turf you want to choose. So a trader faces higher risk. That's one thing I want to say. The traders faces higher risk of losing money if stock prices fall, all right? Because they will buy, and because their holding period is very short. They hold for like 2 weeks. They hold for like 1 month maximum, 2 months maximum. So the share price may always not rise during that time, and many of them will lose patience. They will run out of patience and they will just sell and walk away. Immediately they finish selling, the share price will start rising again. And then they will start licking their wounds. And some of them get disappointed and discouraged from investing in the stock market again. All right, you see that? That's the risk of being a stock trader. That's the risk. So patience is needed even if you are a stock trader. Yes, sometimes you have to be patient with the market, the company. You have bought their shares. All right, stock investors, they face lower risk. So stock investors, basically their risk is lower because they are in for the long haul. Therefore, they are more likely to make money because most of the times the stock prices go up, don't go down. They may only have this kind of zigzag movement, but the zigzag movement of going down is temporary. It will definitely go up. These are the secrets that people don't know. So when they see a zigzag movement going down, they now start panicking and start writing blood on the street, blood in the market, everybody losing money. It happened how many days back? It happened on Thursday. And I recommended to our community members to buy 2 stocks because there was that zigzag movement of stock in US that dropped the share price down and everywhere was red. So people who don't understand this, we start panicking and start selling as if the whole stock market is going to come to an end. That's not true. That's a fallacy, my friend. Don't be deceived. Don't sell. If you trust your strategy, you trust the company, hold on to your position and you will smile. All right. Getting started. Yes. How do we start? Steps to investing in stock. How do we start? All right. You need to start. You just have to start. The first thing to do is you have to choose a stockbroker. Yes, I'm going to be using the language because I have introduced the terminologies. Stockbroker, and I believe we know who a stockbroker is. That person approved by the government in your country to help you open an investment account, just like a bank is approved to open a bank account for you to keep your money, right? For you to keep your stock, to buy stocks and keep your stock, you need a stockbroker to open an account for you. That account is called a stock investment account. That's step one. Choose a stockbroker. In every country, there's stockbroker, we're going to see. Second step is transfer money. When you open the account with a stockbroker, then transfer money from your bank account into your stock account. That money can be $1, please. Don't get me wrong. Because this is the myth. There's a myth that only rich people make money or invest in stock. Only people who made money, it's a lie. That's a fallacy, right? That's another fallacy. That's another fallacy, guys. It's very fallacious. Only rich people invest in stock. That's a fallacy, very big fallacy that is orchestrated to discourage many people from coming and sharing in the global wealth, which is the stock market. We have sized it here and we know it's worth over $115 trillion. That's massive wealth. It could go around everybody. Honestly, I tell you, it could go around everybody. How many people do we have in the world? We just got 8 billion people in the world, and you have one market size of over $150 trillion. And they keep telling you you will lose money. That's a fallacy. It's a lie. You don't lose money when you come with knowledge, like you are here acquiring knowledge, acquiring skills. You go in with this knowledge, you won't lose money. All you need is this basic foundation, and then you continue with your learning, your education, your meetings, attending your conferences, online events, join communities like our community, our investing society here in London, the Stock Diary London. Join club, investment clubs like that, and learn about companies. Learn about companies. I tell you, the money is there, and you will make the money. Except you choose to listen to the lies and you fall back, and then you be a victim. Because they want to create as many victims who will not have access, who will be excluded from the capital market, from that wealth. That's what they want to do. So please, when you listen to them, just listen and say, no problem, let me try. And you are trying with knowledge. The problem is people don't seek the knowledge first and they want to jump into it. That's where they get burned. But when you come with knowledge, you go in with knowledge, you only stand to make money, not lose. All right. So you have to transfer money. It could be £1, $1, transfer it to your stock brokerage account. Okay. The third is you have to choose 2 or more companies. I am very precise here. I say 2 or more. I did not say choose one company. You can share your $1 and invest 50 cents in one company and 50 cents in another company. Make it a habit of always investing in 2 companies or 3 companies or more. You're going to learn that later. And you see the justification why you should not just buy one company only. It's very important. Then the 4th step is to buy the stocks. Buy the stocks of the company you have chosen. Okay. Maybe periodically, you buy every month, you buy every week, you buy you just have to buy the stock. So it depends on how your incomes and how you want to be moving part of your income to the stock market. All right. And the 5th is hold your stocks. The stocks you bought, just hold them. The price is going to increase. Hold them because you didn't just choose. I said choose 2 companies. So the choosing is a big process, and you're going to learn it here, and you learn it in our community when you join the community. And the 6th is to sell and make profit. Okay. When the price increases during your holding period, the price will increase. And this is where your objective comes to play. You could be a stock trader. We know the difference now. Or you could be a stock investor. If you are a stock trader, the holding period will be long, maybe 2 years, 5 years. You just keep investing and holding. But if you are a stock trader, maybe after 1 month, you are here. You are selling the stock to make profit. So it depends on who you are. All right. So opening the stock broker account, it's actually a simple process. That's our step 1. Now, there are different approved brokers in different countries. So let's take a look at some of the brokers across the world. In some countries, in the UK, there's a broker called Trading 212. When you go online, you will see Trading 212. They are always advertising. When you go within your Apple Play Store, they have an app. You download the app. I use this one, Trading 212. I use Robinhood. Yes, partly I use IG. So these are the ones I will recommend to you in the UK. Trading 212, IG, Robinhood. Robinhood is in the United States as well. So in the US, so these are stockbrokers. Remember, we treated this term. You understand the meaning of stockbroker now. So I'm not going to explain it. I'll just be utilizing the terminology because you are indoctrinated into the capital market now. So US, we have Robinhood. We have interactive brokers. Their mobile applications are all in iPhone, App Store, and the Android Play Store for those who use Android phones. Okay, that's where it starts. And then in Nigeria, you have stockbrokers like Bamboo. Bamboo, they are doing a great job. Even if you are in Nigeria, they give you access to the US market direct. They connect you to the US stock market. And they also connect you to the Nigerian stock market, stock exchange. In India, you are from India, we have Zerodha. Zerodha is a digital stock broker in India. They are good. And then we have Grow. Grow is another good stockbroker in India. They are good. You are joining us from Canada. We have eToro. eToro is from Canada. And then we have DeGiro. And if you join us from Ghana, we have IC Brokers. So these are the stock brokers you can choose. Choose one of them. Most of them are online. So all you need to do is just go online, go to your Google Play Store and type this name, and you will see them there. Download their mobile application and open the stock investment account. You must open a stock investment account the way you have your bank account. So I just want to take you through one of the brokers in Nigeria, the digital stock broker called Chaka, a demonstration with Chaka, right? I just want to show you probably my account with Chaka. So I will switch my screen. Look at my screen right now. So if you see my screen, I want to confirm if you can still see my screen, please. Let me know if you can see my screen. Just drop me a chat, yes, in the chat box. Because when I'm switching screen, I'm running the risk that I will be aloof. Yeah, yes, I can see yes. I need to see more yeses, please. More yeses, please. Is somebody there? Okay, sorry, somebody's here. Okay, so more yeses, please. More yes, yeah, yes. More yeses. Okay, yes. All right, I'm seeing more yeses. That's great. Okay, so this is Chaka. So I have an account in Nigeria too with this company. It's a stockbroker, not a company, a stockbroker. So Chaka is a stockbroker based in Nigeria. They connect you to the stock market. So if you want to look at the global stock market, look at it, you select here, and Chaka will give you the stocks in global. So basically, you can come here and select the country. Maybe so you can see all the countries here. You can see countries here on Chaka. They give you access to stock market across the world. So you can be in Nigeria and be investing and making money from the stock market in the United States. So I click on United States and look at the stocks here. These are the stocks. These are the prices of the stocks. Can you see them? Yeah, so these are the prices of the stocks, right? These are the stocks, the prices. If I know the company, for example, let me type your favorite company called Google. Google, your favorite. Google, so this is Google. And then we can see Google stocks, the stock of Google and the price. So this is Google stock. Pretty well. You're going to see how we made money from this stock from our investment club recently. One of our recent stocks that we bought, and we made good money on it within 2 weeks. So yeah, as for traders, okay, so Google stock, that's it. So that's just a quick demo to show you this is a stockbroker in Nigeria. So if you are from Nigeria, in this summit, you can look at Chaka. Chaka is a good broker for you. And Bamboo, right? So these are the brokers. All right, so I'm switching my screen right now, quickly, rapidly. back to our investing for beginners. So that's it. So you have to choose the right broker, and it's important you choose the right broker. So your broker is very important. So choose the right broker. Okay. So the next thing is, how do you choose the right company? Because we say choose the right company. That's where it starts. That's the breaking point. The breaking point is choosing a wrong company and investing in a wrong company. So it can be hard, but don't worry. Don't be afraid. It's also easy, okay, to choose which one should I buy. I think that's the fulcrum of investing in stocks. Which company should I buy? Okay. Because of the risk we have studied, we studied the risk of a company going bust. Some big companies in the world like Enron went bust. Shareholders lost their money. So you are afraid because of that company risk. Okay. But we will guide you. We have community. You'll be there with us. We'll be choosing together. We'll be growing together. We'll be making the money together. And we'll be partying together. I love partying. Yeah. When we make money, we party. It's good to party when you make money, right? All right. So you have to choose the right company. Guys, choose the right company. So in our community, right, called the stock, in our investment club called the Stock Diary London, we're going to admit you into that community and we will help you with this process. That's one. But we will also want you to learn and develop how to choose it by yourself. So every week we kind of do our research and the background, the engineering that takes place behind the scene, investment research. So we have a very strong equity research desk. Yeah, very strong equity research. It's all about researching. We start with research. So we do all of the dirty work and we bring the finished information to you in the stock, Society Investment Club, Stock Diary London. So this is the link. I'm going to drop this link on the chat box. So if you have not joined this society, you want to join us because we'll do the dirty work. All we will do is we just require you to follow the instruction and buy. When we say we are buying Google, you should be buying. When we say it's time to sell, you can sell. Or it depends on your objective. You may want to sell, take your profit, and then buy back again when the price goes down, because the price will always travel like a wave, in a wave-like structure or shape, right? Falling down, rising up, falling down, rising up. That's how the stock price travels, okay? So, I'll share the link and then you will join us there. So this is the link. I'll drop this link by the chat so that you could have access to the link and you join us there. So I'm dropping these by the chat. Where's my chat? All right, so this is the link. There you go. You have the link. It's a WhatsApp community, our club, investment club. Please catch up with us there. And we could help with that very doubting task, choosing the right company. How will I know the company to choose? That's the biggest headache of many people, especially new investors like yourselves, for those of you who have never invested before. Yeah, but who want to start? So this is it. Portfolio, there's one important science called portfolio and diversification. There is that investing science that this will not be complete if I don't mention it to you. And I've already mentioned it earlier on. I say you should always practice the principle of building a portfolio to reduce your risk. We mentioned 3 risks. Price risk, that's the market volatility risk, inflation risk, and company risk. The solution to all of this risk is portfolio. You need to cut your risk down. And the only thing that help you cut that risk down is called portfolio and diversification. So it means you have to choose 2 or more companies at any point in time to invest in. So even if we are giving you in our weekly recommendation, we are recommending one company. We will recommend one company this week. Next week, we'll recommend another company for you so that you will not achieve the portfolio and diversification principle objective. It helps you to neutralize the effect of one company going bad on your portfolio. If one company goes down, the other company goes up, and then everything will even up. It will even out. It will offset the profit or gain in that one company will offset the loss in one company, and therefore you will not lose anything at the end. You have your capital the way you started and you continue investing. Can you see the science? So that principle, that scientific approach is called portfolio and diversification. Portfolio and diversification. So it means putting your eggs in more than one basket. So say don't put your eggs in one basket. That's what I'm telling you today. We do not put all our eggs in one basket. If you look at my portfolio, you have different stocks. You have Nigerian stocks, you have American stocks, you have inside America, you have technology stocks. So all my wealth is scattered across. So if one stock is going down, I am not worse off. I'm not bad off because one is going down, 3 are going up. At the end of the day, I'm not feeling the pains. And I'm not feeling that I'm losing money and nothing is happening. And in fact, I'm not losing money. I'm making money even with one going bad. So that science is called portfolio and diversification. And this is the knowledge you cannot get on the street. Those who tell you, oh, don't invest in stock, it is bad, they have zero knowledge about portfolio and diversification, scientific approach of investing. But here are you today, you know it. It's left for you to go and practice it. All right, so you have to use digital tools. Digital tools are also very important. Using digital tools is important. Now, I have some tools that I'm going to recommend for you and introduce you to them. These tools make investing very easy. Investing used to be a very hard job, very hard job. But today we have digital technology tools I'm going to introduce to you here. You try your hands on them. They make the job investing easier. All right. So number 1 tool is investing.com. Now, investing.com helps you if you're looking to achieve 3 things. Please go to investing.com. On your device, you can see it. It helps you to know the company. You need to know about the company. That's why we say choosing the company can be hard, but it's not hard. First, you know about the company. Oh, what are they selling? What product are they selling? Do I like their product? Let's personalize investment. I think that's one thing people get it wrong. People don't personalize investment and they get it wrong. I'm not buying the stock of a company if I don't like your products. That's my number 1 rule. If your product doesn't interest me, I'm not buying your stocks. Therefore, I won't lose money in that stock. That's number 1. So I try to personalize my investment philosophy. Personalize it you too. If you don't like a company, why should you buy their stocks? I don't like a bank. Why should I buy the stocks of that bank in the first place? I don't like some products. Why should I buy the stocks of companies that produce those products? Okay, so it's very good. That's kind of starting from that helps you a lot. So if you want to know about this company, the way country where it operates, and their plan and strategy, investing.com will help you. And also, if you want to know about the EPS, our EPS and P, fantastic. We have already got used to EPS and P. So we can use EPS and P and compare it with the peer companies. For example, I can't just jump and be buying Tesla. No, I'm not buying. I want to know the EPS of Tesla, and I want to know the P ratio of Tesla. I believe I'm talking to informed investors now because we have already studied these terminologies, EPS, P ratio. So I don't need to define them before at this stage because you're already used to them. Yeah. And then to help you see, you want to see the price of the stock for the day, you can use this tool. Very good tool. So I will switch my screen quickly and take you to that tool. Okay, so let me know if you can see my screen. So this is investing.com. This is investing.com. So when you just type in your browser, type investing.com, investing.com. All right, I'm going to drop the link also in the chat box so that you could have access to it. You will have access to investing.com. So I've dropped the link there. You can click on it and open it and just play around it. So you want to know which company, let's say Google. Let's continue using Google. So you want to know about Google. Be careful that Google, yeah. So look at the price. So investing.com helps you immediately know the price of the stock. Or what's the price, the stock price today? Can you see it here? Straight away. Once you open, you type the company's name, straight away you see it here. Alphabet. Yeah, the parent company of Google is called Alphabet. You know it. And then you want to know the price. You want to also see the chart briefly. Now, if you want to know about the company, you can scroll down and have a read. Just read about the company. Look at the company here. Just read about them. Alphabet, the product platform in the United States, the market where they sell their products, all of the countries are listed here, the continent, Africa, Asia. So they're basically selling their services everywhere in the world, Alphabet, Google. Look at, you have to know the industry, where are they, technology industry, industry is IT, and then sector technology. The country, you want to know their major market country, United States. And maybe you want to do some reading about their financial strength. So you just want to know about them, right? Just you want to have an helicopter view. So investing.com will help you to come to terms. Just, I'm not saying you should read everything. Just use these tools, know the price. Oh, how much is the price? Amount I will buy or sell if I want to buy today. It helps you to do that quickly. All right. So also, if you want to know about their P ratio and EPS, you come here, you just say, okay, good. So you basically come to down here, look down here. Can you see EPS? Look at EPS here. EPS means earning per share. We have defined it, we explained it before. So the EPS is that, what it means is that they are making about $7.61 per share. All right. Remember, EPS is the total profit they made divided by the total number of shares. That gives you the profit per share. All right, sorry, let me admit somebody in. Somebody is waiting. All right, got a couple of people waiting. All right, you should be in now. All right, so you know the EPS. So this is the EPS. So if I want to know the details, now I want to know, is the EPS growing or is decreasing? You need to have that knowledge. Is it growing or is decreasing? So you just click there and it takes you here and gives you more insight about the EPS. Look at this table showing the EPS. It's actually growing. EPS is growing, yeah. From 2.4, EPS is growing to 2.9 to 5.6. Oh, it fell here, dropped here, and then started growing again. That's a good one. So the EPS has actually been growing. That's a good sign. It should tell you that, oh, this company looks like a good company. So it's just one of the processes of choosing a company. How can I choose a company? And then you can also compare the EPS with other companies like themselves. Look at other companies' EPS. Compare to this. Look at other companies are actually suffering. So you see that Alphabet is doing very well. They're doing better than these companies, because this company, look at this one, their EPS is even negative. It means they're making loss, they're not making money. You can see that so EPS of this Google has the highest EPS compared to the peers, the competitors that produce the same services like Google. Google is the king. And what should that tell you? That should tell you that this company, no wonder I recommended it to our investment club. Was it last week? Yeah, I think last week I recommended the stock, and it's our stock for 2025. It's cheap. It's very cheap. Okay, why do I say it's cheap? Let's go and see what is called the PE ratio of that company. Now you still come back here, look at PE ratio. The PE ratio is 25.5%. Oh, what does this mean? I explain it to you that PE ratio, you should check, look at the EPS and look at the PE ratio. The PE ratio will tell you how much dollars are the shareholders paying for $1 of this. Look at the EPS here is $7.61. But how much? $1 among $1 of this 7.61. $1 cost how much? Cost investors how much? Now the P ratio will tell you that, oh, $1 cost investors about $25.5. Investors are willing to pay $25.5 in order to take a share of this EPS, of $1 EPS. All right? That's the meaning. And this can change your investment philosophy, approach, and transform you to a very successful investor. And bet you for that. Okay? You just look at the P ratio, look at the EPS. Now let us compare. We will not draw a conclusion. Let's compare. Again, so you don't read and draw a conclusion. You must do what we call comparison. You must do what is called comparators. Go to the industry. Look at the industry. The industry EMP ratio, basically in this industry, is even negative. So we won't bother about this industry. The average industry is negative, but what we are concerned is the lower the P ratio, the cheaper is the company stock. And therefore, the higher the chances that the share price will keep going up. The lower the P ratio, this P ratio, the lower it is, compared to some of the competitors, the cheaper is the stock of this company. And when the company stock is cheap, buy, because the price is going to rise. Given that you have already confirmed that that company has an EPS that is growing already. So look at these companies that are competing with Google here. This one has an P ratio of 28, which is higher than Google. So this company is more expensive than Google, even though they are doing the same thing. Another company competing with Google has 38.5 and is higher than Google. Google is still cheaper than that company. Look at this company has 92.4. Oh my God, that's too expensive. I won't buy. You know why? Because the price of this company has no room to grow. It's going to come down. The price is only going to fall. But look at Google here. It's a hidden gem. People don't know. The ordinary eyes will not see this, except an investor like you who attend this kind of platform, this kind of summit, to discover this kind of knowledge. You go and start executing. All right. So these two, please grab these two. Let's leave the two and move on. Spend a lot of time here too much because it's very important about PE ratio and EPS. That's why I spent considerable amount of time to really help you understand the application of this in selecting a company to invest in. All right. So I'm going to switch gear quickly and switch. So ladies and gentlemen, I think this is the end. We come to the end of this session about investing. And I believe you have a good idea on how we select stock. Now, there's another tool I want to introduce the last two before I move called TradingView. TradingView helps you to see the stock chart. Because don't say I hate chart. I don't like chart. Please, you need to start loving chart, and I'm going to help you understand chart. It's very simple. Use tradingview.com. It's free. I'm going to drop the link as well. I'll come to my tradingview.com. I'll say tradingview.com. I come here. Excuse me, let me bring in some people to the room. So basically, I come here, admit, sorry, I'm admitting then. So I come here to tradingview.com. And in the TradingView is another good, powerful tool, right? Very powerful tool. So all of these tools are free tools. They're free, but you have subscription as well, of course. But I use the free ones. I subscribe, because I'm an experienced investor who has the money. So I have the money to pay, then I subscribe because my usage is very industrial level usage. You are a starter, don't subscribe, just start. With the community and society guidance, you'll be there. You'll be there. You have the money to subscribe, right? All right. So investing.com, let's continue with our Google. Let's see the chart of Google. You want to see this chart live and you want to see it better. Look at this. So you use this. So it tells you about the chart. So you see what I did? I run some magic around it. Let me remove this magic so that you can understand that this is ordinary chart. And I will put this magic together with you. I'll teach you how to put them and show you what they tell you. Yes, that's the essence of attending this kind of summit. It's the first of its kind in the whole world because they won't let you know these secrets. Yes, but hey, it's my motivation to let everybody know because the money is too much and it can go around. We're just 8 billion people in the world, and this money is over $115 trillion and it's still growing. So it means we can share 1 billion to every human being in the world and the money is still be there. $1 billion. All right, don't mind me. You need to work for it, guys. You need to work for it. Don't mind me. We're going to leak their secrets. Okay. So I'm trying to remove. Okay, let me try remove this. Remove, please. So remove. Oh, fantastic. I have a cleaner chart now. Cleaner. Okay, it was cleaner in my eyes, but not your eyes. All right, ladies and gentlemen, we have a brand new born baby chart now. This is the Google chart. So trading.com, tradingview.com is where you need to come. Open an account with them. To set our account is free. Use email. That's all you need. So look at this chart. For this chart, I may want to understand where is the price heading next. All right, and that is called technical indicators. Technical indicators. So I use technical indicators. So I will come here. The indicator that helps me so much to know the volume and to know what the price is heading next is called MACD. It's an indicator, I call it MACD, MCD. So look here, you will see indicators up here. Can you see? Just let me be sure that we are in sync and we are seeing the same page. Oh, indicators. So I'll click indicator. Please shoot me a yes if we are on the same page, please. Shoot me a yes. Just shoot me a yes, please. Let me know you can see each other. Okay, somebody say I should use NVIDIA as an example. Oh, beautiful. Let's use our darling NVIDIA. I recommended that stock to the community too. Okay, thank you. I could see yeses. I recommended NVIDIA to our community just 2 days ago when there was blood. Everybody was screaming, there's blood, bets, blood in the market, blood everywhere. We were saying, no, it's not blood. It's opportunity to pack money on the street. Ladies and gentlemen, that was how we pack money. Now, let me go back to NVIDIA. Somebody said I should use NVIDIA. So let's use NVIDIA. So let's change from Google to NVIDIA. Our darling NVIDIA. We are still in it, ladies and gentlemen. We have entered and we are there. We're not going anywhere. We are still in NVIDIA. We are still in NVIDIA. Ladies and gentlemen, this was how we entered on this day. You can see there was blood here. Here, it was a day that people who don't know about investing, don't know about stock market, were telling us that there was blood here. Look at this blood. Can you see this? This was what they describe as blood. The price fell from here down to here. And I went to our investment club and I told everybody that. And they bought here. They bought here at $128 per share. That was just 2 days ago. And today we are already here. This is just the journey. The journey has just started. We are going. So our target is going to be $150 for the traders. That's for those traders who want to make weekly money. They will take their profits and go. But for the investors, maybe till next year or 2030. So choose your turf. That's why I say choose your turf. Where do you belong? Where do you want to be? You want to be a trader or you want to be, Usain Bolt that goes for the long haul, choose your turf. All right. So that's it, ladies and gentlemen. So I have some indicators. Let me teach you how to use these indicators. I come here and I use a MACD. I say MACD. So MCD means moving average convergence divergence. I will show you how to use it. So MCD. So look at MCD. MCD has two tiny lines, two lines that move in wave-like structure. Wave, like a wave of light. Wave. Zigzag. And then it has some bars that will show you green, red, green, red. Now, these two lines are very important. These two lines, look at this blue one. The blue one stands for price divergence. They tell you whether the price is going to fall or price is going to rise. Okay? Like, look at this. When the blue one crosses the red one, price is rising. True or false? Look at it. The blue one crosses this red one and is going up. Price will rise. Look at it here. Price started rising back. That was where we bought. We bought it here in the investment community recently. So we bought here. We are here already, right? We're already here at 135. We're heading to 150. For the short-term traders, stock traders, we sell and take their money home. For the investors, they will stay on the long haul. And we will head to $200 next year, January, February. Okay. So that's it. That's how to use it. Now look at this, tells you the volume, the kind of people that are buying. You can see that people are buying very well now. That's why you see this turning green, the bar chart turning green. That's it. So that's it. So ladies and gentlemen, we have come to the end of this session. Quickly, let's move to the next session. Our next session is our scorecard. Actually, our scorecard, we cannot do anything without showing our scorecard, our accolades, because they underline the confidence that you repose in me, the convener of our investment club and the entire community. So our scorecard is based on seeing is believing. That's an adage that we used to speak then in Africa. Seeing is believing. It's not common here in Europe, and I think in the United States it's also not common. All right, seeing is believing. All right, ladies and gentlemen, I laugh a lot. I laugh a lot because when you are operating from the position of knowledge, you are so confident, and that confidence makes you to laugh. All right, so I laugh a lot. I'm always laughing. Yes. So that's what we seek to achieve with the community, with our investment society club. Everybody should come to that position of knowledge. As far as investing in stock market is concerned, be knowledgeable and be precise and know what you're doing at every point in time. That's it. So the result of our investment recommendations. So every week we recommend from the year 2024 when we started. We made a lot of recommendations, but we have picked some recommendations here to show you the performance. How much money our members have made, those who belong to that society, the investment club have made, all right? The stock diary. Those who execute, not those who belong but don't practice what we teach there. Those who practice what we teach. So there's this company called Arade PLC. Some of us bought that company at 433 Naira. This is Nigerian Naira, right? The share price of that company rose to 730 naira last week. We sold it, and that's a profit of 297 naira per one share you bought. And that represents a profit in percentage return. You made a return on your investment of 69. I can remember I recommended that investment in, was it September? September. I started recommending it in October, November, yes. So our holding period was basically 2 months or less than 2 months. So we made a profit of 69% in less than 2 months. So whatever amount you invested, you got to have 69% on top of that. That was what we made for that stock. There's this stock called Nvidia. That's the stock I use. We have recommended that stock before. Yes. That stock was that was in August. In August, yes. $118. Some people bought. Some of us bought. I sold that stock. On my personal account, I sold it at $148, but the stock went to $152. And that gave us about 25%. Yes. There was another stock. When there was blood on the streets in Nigerian stock market called J. Berger PLC, Julius Berger. I recommended that stock. We bought it at 55 naira, Nigerian naira per share. And the stock price went to 172. We sold at 172. We made 213%. So whatever amount you invested in that stock, you have made, our members made 213%. That's a lot of money within months. WAPCO PLC was another stock that was very recent. When our investment researchers pick up the stock here, in our investment research desk, we pick up that stock. It was selling at 48. We recommended it buy, and we bought it. I personally bought that stock on my account. We sold it at 176. Ladies and gentlemen, that's the best investment we made during this year. 267% gain in less than 3 weeks? In less than 3 weeks. So, and you could see that. And there's a stock called Broadcom. We recommended this stock. I've been holding it. $177. We sold this stock for $242. 37% within a couple of less than weeks. Yeah. And then Vistra Energy, very good stock, but it has a future, and I think it's on our mega trends for 2025. This stock, it has a long future based on what's happening. And then I recommended this one. I was very sure when Bitcoin got formalized into the US stock market through ETF. Our members bought, many are still holding it, but we are 30% up. So whatever money you invested in Bitcoin, I share pro share Bitcoin ETF, you should be having 30% more money on top of your investment. And then, so ladies and gentlemen, that's how we performed. So in summary, our least performance, the lowest money we made was a 5%, and that was gold. Yeah, when I recommended gold, we made only 5%. Invested at this, we sold at this 5% return on investment in gold in the year 2024. And our biggest return, of course, is Lafarge, WAPCO Cement PLC. Yeah, that's a company listed or quoted on Nigerian Stock Exchange. We got a killing here. We made 267% on that stock in 3 weeks. Yeah, I think 3 weeks. 3 weeks. All right, ladies and gentlemen, that's how well we have performed. Thank you. So you see. So when we are basically speaking, we're not speaking theory. Yeah, we are theorists because I'm a professor. So I love theory because in recent, theory informed this. All right. So I start from theory and I move to practice. So it's great. But hey, if you do it only on theory, you cannot make wealth from the stock market. You have to be able to move your theory from the position of theory to practice. That's what creates wealth for yourself and for your community and people around you and your clients, of course. All right, ladies and gentlemen, quickly, investing strategies. I can't stop without this. We have to move quickly on investing strategies and move into mega trends and close and bring this to an end. I'm not going to take your time. We'll finish the dirtiest work, which is the most difficult work we have done. We finished with that. So I want to check if you can see my screen. Please, can you drop me a yes in the chat? Let me know if we are still in sync, please. Kindly drop me a yes. A yes. I could see yes. I want to see more yeses, please. More yeses, more yeses, more yeses. All right, yes. Thank you very much. We're in sync. Thank you. All right. Oh God, this is investing strategy. How do I do it? Ladies, gentlemen, it starts with strategy, ends with strategy. You see, it starts with strategy, ends with strategy. You need to be confident. And how to be confident in the stock market is your strategy. You need to create a strategy. So what is strategy? People lose money. People say, oh, I lost money in stock. They don't have strategy. That was why they lose money. Or they refuse to change their strategy when they saw that it was losing money. They still held on to it. So these are the reasons people lose money. So what is strategy? Now, a strategy is very simple. It's a clear set of rules, simple rules, like just one rule. Simple rules that can guide you to make decision to buy and sell stocks. Okay, that's the meaning of strategy. Simple rules. Buy, sell. Buy if this happens, sell if this happens. Simple. So I strongly advise you, I recommend that you should always create a strategy. You can create a simple rule, simple. So when you hear strategy, it's nothing serious. It's just simple, clear rules that guide me. Buy, sell, buy, sell. Remember, in stock investing, we're only doing two things. Oh, we are doing three things. We are buying, we are holding, we are selling. All right, three things only are we doing in the stock market. So please take note. All right, ladies and gentlemen, I'm excited. Yeah. Now you can create your strategy using this syntax. I just want to teach you how to create strategy. Just get these rules. Say, if this dash dash, then this. If this happen, then I do this. Okay, that's what that means. See an example here. And I'm going to be using your pretty, precious, beautiful, handsome P ratio and EPS. Wow, I got investors now who understands the language. P ratio and EPS. I want to create a simple strategy using these two parameters, P ratio and EPS. A strategy like I can create a strategy using that syntax. If P ratio is less than 10 and EPS grows more than 10%, then buy. That's a simple strategy. I create a simple rule now, ladies and gentlemen. If the P ratio of a company, I go on investing.com and I check the P ratio. If the P ratio is less than 10, I see 10 is less than 10x or 10x, okay? And the EPS, I check the EPS is growing and the growth rate is 10% or more, then I'll buy the stock. Ladies and gentlemen, I'm going to buy that stock. That is a simple strategy. That's what is called strategy in investing. Yeah, don't let anybody deceive you. It's not hard, it's simple. Now, I want to recommend some strategies for you as a beginner, right? These are the strategies. Number one, dollar cost averaging. There's what is called DCA. Pardon, let me admit somebody outside there waiting. So, two people are waiting. Excuse me, let me admit them. All right, ladies, gentlemen. So there is a strategy. I want to recommend some straightforward strategy that you could use as a beginner. Choose one, all right?
Just choose one. Simplicity is very good in investing. In stock market, it's good to be simple. Don't be complex. All right. That's why I told you, I've showed you a very simple strategy here. And I will believe in my strategy. I will have faith in my strategy. And I will implement and execute this strategy consistently, ladies and gentlemen. Every year, I'll keep doing it. I'll keep doing it. And I'll keep making money based on this simple strategy because it is working. Very simple, just a single line strategy. I don't need a 100-pager document to make money. No, that's why investing in the stock market is quite simple. So you must keep it simple if you want to be successful. Keep it simple. I'm not saying you should not do your thorough research because we do research. We have a research desk here based in the UK. All our recommendations are based on tested strategies and continuous investment research, equity research. So you have to, of course, do your research, but at the end, summarize the whole gamut of information into a simple line, simple rule called strategy, and then test it and implement it. So number one strategy, dollar cost averaging, DCA. DCA. I want to introduce you to some of these jargons. I will explain and you will see how it works. And it's very good. And I recommend it for you to you. Number two strategy is market indexing. Okay, stock market. You know that one already. Indexing. You know stock index. In one of our terminologies that we learn in this summit, we explain what a stock index is. A stock index is just a summary, one figure that summarizes the whole market, gives you one number, tells you is the market going up, is the market going down. All the stocks in the market, are they going up or they're going down? That's what is called an index, stock index. We use index for this strategy, so it's good to remember the stock index. And ladies and gentlemen, our big boss called thematic strategy. Thematic. So let's look at them one by one quickly. Now, thematic strategy, sorry, I so much love thematic strategy. I'm not talking about you, please, thematic. I'm talking about DCA. What's the meaning of DCA? Dollar cost averaging. Dollar cost averaging. So now, what does it mean? So it means that you should invest just a fixed small amount of money periodically. You don't have money to invest, no problem. I told you can invest $1. So don't say you don't have money to invest, ladies and gentlemen. It's a lie. Don't tell me you don't have $1 to invest. You can invest $1. Okay. You can grow $1 and use this strategy. But of course, you have to invest for a long time. If you're investing as low as $1, then you have to be investing maybe $1 every week, every month, consistently, maybe over a 1 year, and see how your strategy is working. All right. So you can invest $10 monthly, $10 monthly every month. You just buy, you know how I'm buying $10. It doesn't matter whether the price goes up or the price is down, I'm buying. That's your strategy, all right? You're just buying every month and month. So, ladies and gentlemen, if you sit down after 1 year or 5 years or 2 years and you check the average cost of your shares that you bought, the average cost will be lower than the current market price. It works magic. And it's very simple. You don't need to do too much research like I do as a professor. Okay. You just have to go in and say, of course, you have to choose the company. Remember our steps. Choose the company. That's it. So that's all you need to know about this strategy. It's very good for beginners who have small money, only small money to start testing the waters, to start investing. Please make sure you invest. Everybody has the money to invest. I don't want to, no excuses that I don't have the money. Indexing strategy, okay? So indexing strategy basically means that instead of investing in only one stock, I want to invest in a basket of stock, basket of stocks that track the overall stock market index. We know the meaning of stock market index. I'm not going to explain. I'm talking to investors now, trained professional investors. So the basket of stock, right? You don't just want to invest in one stock like Nvidia, like Google. No, you target a basket. Now there is another fund that collects multiple stock and package them together into a single stock to sell. So your investment strategy is to be buying those stocks that have been packaged. They collect Google, they collect Microsoft, they collect Nvidia, they collect Tesco, they collect Sainsbury, and they package them together into a single stock. And that's where you're putting your money. You're buying that index, and automatically you are buying the remaining stock. When you buy one unit of the index, you are buying the whole package. It's a total package, okay? So that's it. So it helps you to diversify. Remember, we talk about diversify and portfolio and diversification, right? So when you are doing this strategy helps you to diversify easily without having to buy two different stocks and put them together by yourself. Okay, the stocks are already put together for you. All right. So ladies, gentlemen, thematic investing. That's our last strategy. So 3 strategies I've introduced to you. Choose one. Just choose one, make a choice. Thematic means investing in the stocks of companies that are benefiting from a mega trend, a very mega trend that will change the whole world. I need your participation right now. Which trend do you think is changing the whole world now, please? Any trend? Can you drop on the chat? Let's talk. Is there any trend that is changing the whole world? Anything you know that is changing the whole world? Technology? Yeah, AI, artificial intelligence is changing the world. AI, machine learning, AI. Now, thematic investing means simply investing in stocks that are creating AI, creating this kind of products, revolutionary products, all right, that are changing the whole world. They are revolutionizing the whole world. AI, automation, and robotics, yes. So when you are using thematic investing, you will look for stocks, AI companies, and you will buy their stocks. That's where you are. You will concentrate on buying the stocks of these companies, the companies that are creating revolutionary products that are at the center, at the fulcrum of the revolution. Either it's AI revolution, chips, yeah, chips company. So you are just all you know about investing. If anybody asks you what's the meaning of investing, you just define, you say the investing means buying AI stocks. Ladies and gentlemen, that's how powerful the knowledge of investment strategy can be. All right. Yeah, you should. Oh, investing means buying AI stocks. That's it. And in real sense, that's the meaning of investing to you. And that's where you are making wealth and making money because themes never fail. Themes never fail. When I pick up NVIDIA, I picked up NVIDIA, was it this year, early this year? And I recommended NVIDIA to our community early this year, to some of our clients, my clients and community. We invested in NVIDIA, and from early this year to date, NVIDIA has produced over 175 return. That's one stock in your portfolio. It's giving you 175%. In the last 5 years, NVIDIA stock has returned over 5,000% for the past 5 years, average of 1,000% per annum. That's a mega trend, AI. So that's what you are restless. Ladies and gentlemen, don't worry. When we find out on our final note, I will introduce our mega trends for next year. I am restless until I find a mega trend for next year, or the mega trend for the next 5 years. What is going to make me $1 million in the next 5 years? So your own strategy is themes. You just choose themes. You are a thematic investor. You are investing only in mega trends. You don't care about any stock, but you are a dedicated mega trender. You are a mega trend follower. So whenever you see that people are running about going crazy about a particular stuff, You start doing your research. Which companies are producing this stuff? People are going crazy. Yeah, you start looking for that, looking for those companies, looking for those companies to discover the hidden gems. That is what makes the difference. Okay. So, ladies and gentlemen, these are the investment strategies. So, what do you think is the next mega trend? Let's talk. Have you thought about 2025? What's the next mega trend after AI? What do you think? What is going to give you $1 million? What do you think? Let's interact on the chat, please. What do you think is going to be the next mega trend that will change the world, that will change the way we live, we change the way we drive cars, we change the way we do a lot of things? All right. So on the chat, what do I see? Data, robotics, okay. Cloud, okay. All right. So just think about it. Think about it. But you need to, investment is a philosophy. Yeah, it's philosophy. So you need to philosophize. You need to be a philosopher. You need to be a prophet. You have to be forward thinking. Think. When there's an election or government is being changed in a major of these countries, be thinking around that. Yeah, be thinking around that, because the US warehouses over 45% for those of us joined earlier of the total equity market size globally, $115 trillion. That's what we are here to take our own portion of that $150 trillion. We're here looking for knowledge to take our own. They say, I'm a Christian, so in the Christendom, in Bible, we say we possess our possession, right? Yeah, in Christendom, we say we are here to possess our possession. All right, ladies and gentlemen, let's try and be winding on cybersecurity. Yes, cybersecurity. Yeah. So mega trends, you're looking at trends, and that's why you're chasing the companies. And every time you are using your DCA, the companies you are selecting under your DCA to invest your $10 every month are companies that are inside the trends you have identified. You are not just going beating about the bush and complaining. No, you're not going to complain about the situation wherever you are. Don't complain. Do the work. Take this knowledge, go do the work. That's all you need to know. You need to do and do, ladies and gentlemen. Okay, so on a final note, our mega trend, because I know time is fast gone, so this is our last and final segment. 2025 mega trends. All right, ladies and gentlemen, I want to unveil the mega trends to you. So this is the moment we're all waiting for. At 2025, I see people making millions of dollars, okay? Those who will follow these mega trends, I'm about to unveil. Mega trends, we have already said it's an extension of the thematic investing strategy, okay? So we identify companies, future companies that are going to be producing revolutionary products, technology, services, and then we invest in their stocks. That's what we do in mega trends philosophy. So based on this philosophy, I have the pleasure to unveil two themes, two mega trends that will shake 2025 based on my research, investment research here, all right, in the UK. Yeah. Quantum computing, ladies and gentlemen. Have you heard about quantum computing? Give me a chat if you heard about this thing. Quantum computing. Let me hear you on the chat if you have heard about quantum computing, please. Let me see your chat. Yes, no, yes, no. Yes, no, no, yes. Quantum computing. So forget about NVIDIA. NVIDIA is finished, ladies and gentlemen. People have already made millions of dollars off NVIDIA and they have left. So you can't make $1 million if you are still dwelling on NVIDIA and Google and Microsoft. That's why you have to move. You have to move. You have to shift. You have to quickly move. All right. So quantum computing. So quantum computing, there are a couple of companies right now in the United States Stock Exchange. I'll show you. Number one is Google. Google is still there. Google is still there. You see why I recommended Google last 2 weeks to the investment community? It was on the basis of quantum computing. They made a breakthrough discovery in their research lab. They made a breakthrough in quantum computing, and immediately they announced it, their share price started rising. It was cheaper than it is today. It was after the quantum computing breakthrough that investors started pumping money into Google stock. So if you are an investor and you are not following the crowd, I'm talking about real crowd that is based on strong fundamentals, then you're not following the trend, not the crowd, please. Trend, then you're not going to make it. You need to follow the trend. You will make it, but you may just only make your passive income to pay bills. You can't make $1 million. Honestly, if you don't follow the mega trends, or it will take you many years to make $1 million. But if you follow mega trend, ladies and gentlemen, you will magnify. Everything is about probability, right? In finance, we talk about probability a lot, statistics, probability. So you will magnify your chances of making $1 million faster. You might even make $1 million next year if you follow mega trends. Okay, quantum computing. You have a company, Google, you have one company called Rigetti. So you can begin to check them right now on investing.com, Rigetti. Check Rigetti and you will see. Let me show you what Rigetti is doing. I was just marveling when I was doing, it marveled me because investors are jumping fast. Ladies, when you're living here, if you can, jump. All right, if you can't jump. All right, that's why I say you come here to take action. We don't come here to procrastinate, to study procrastination. So let me go and bring out a chart of Rigetti so that you will see how the kind of momentum the stock is gathering. All right, Rigetti, ladies and gentlemen, welcome Rigetti. So look at Rigetti. Rigetti is still $9, ladies and gentlemen. Ladies and gentlemen, it's still very, very cheap. It's still $9. Okay. I'm not talking too much. I spotted it here. It was $5 when I got to know about it, when I discovered the hidden gene. And today it's already $9, which is still very cheap. Stupidly cheap. All right, ladies and gentlemen, that is Rigetti. That's just one. Okay. And we have not finished the second. Let me unveil the second mega trend for 2025 and 2026. All right. What's going on here? All right, sorry. Excuse me. I'm struggling to change my. Okay, I have to click first. All right, stabilized. So mega trend number 2, ladies, gentlemen. So these are the quantum computing pioneers. IonQ. If I show you IonQ, you will just marvel. You open your mouth wide. They have started churning out millions of dollars to investors. And QBTS, yes, QBTS. Okay, let's move. And ladies and gentlemen, welcome nuclear power. That is the second theme, mega trend for 2025. That is going to unleash, churn out millions of dollars for investors. Okay, 2025. And why? Why nuclear? Somebody say, oh, nuclear is used for nuclear weapons and destruction. No, nuclear energy is a clean energy. It's cleaner than carbon. It's cleaner than what do you call it? Your gas, natural gas, liquefied natural gas, and all the gases. It's very clean. That's number one. Number two, it is being used because the AI mega trend you have identified is energy intensive industry. AI, to train AI models, you need a huge amount of energy. And therefore, there is a need for alternative energy. But that alternative must be clean because of environmental sustainability. And the easiest accessible energy source is nuclear power, ladies and gentlemen. So here are the pioneering companies you can buy now when you leave this summit. Oklo is a company called Oklo. Oklo is backed by NVIDIA. And there's one lovely company that I recommended to the society, to the investment club already, called Vistra Energy. And then you have Global X, and then you have Energy, X Energy. Ladies, gentlemen, these are the hidden gems that will make new millionaires in the year 2025. Thank you very much. We come to the end. We are moving to question and answers, please. I really want to let us go at past or yeah. So any question, any answer, any question and answers, please. You have a question, I will just open up the mic for you to speak, and then I will respond promptly. Please, you go straight to your question, ask the professor your question, and then I will respond promptly. Okay? Thank you very much. Thank you very much. So, oh, sorry, I got people here waiting. So one person waiting. All right. Yes, somebody here asking a question. Okay. Okay, sorry. Let me try and give you access. Okay, I allow the mic for you. Carry on, please. Geoffrey.
Good evening, Japheth.
Good evening. How are you?
You are amazing.
Thank you.
God keep blessing you.
Amen.
If we met people like you years ago, we wouldn't have been in the hands of scammers. But thank God you are here to open our eyes.
Thanks.
Some of us who are into crypto and other things, we can completely agree with you that your trends are super amazing.
Thank you.
I have even mentioned you on Facebook just a while ago to say, man, this is mind-blowing. I wish more persons would also come to this understanding that there's an amazing amount of money to be made, and that it's not just about scamming, but it's a genuine money that can be made. What I want to ask is, are there any fees that one needs to pay to be part of your group? Because I know I've already even applied to enter the WhatsApp, but I know that you've been an amazing teacher, and so what are the payment structures that are available, even if one can afford now, because you are building a lifetime group of people who are going to be investors, people who are going to make genuine money to make a difference. I'm sure that it's important we know some of your the payment structures around what you will have your services, so that we can prepare our mind.
Thank you.
Investing. Thank you.
Thank you. Our community is free of charge. To join our community is free of charge. Okay. You don't need to pay a dime to join the stock community. I've shared a link to our community. Just click the link and then request to join on WhatsApp and you'll be there. Okay, I have another hand here up. Sorry. Okay, carry on. One Cornelius. Hey, Zunga, my brother. Carry on, please. Open your mic and speak, please. Your mic is still. You are the one to open the mic. I have allowed you from my end, please.
Yeah, thank you very much, my brother Dave. Thank you very much.
Glad to have you, my brother.
Yes, me, I'm not even a beginner yet, but I really appreciate. I've been following you in the community, I'm just looking for money to join properly and begin.
All right. Thank you very much.
I want to ask specifically about the future of Nigerian stock market. Most of these stock you mentioned, they are more buying dollars. What are we that may intend to buy in Naira?
Okay, thank you. That's a great question. So you are in the community, you're going to get a lot of recommendations from the Naira stock, okay? And then I'm going to make available my watch list. I have a watch list that includes Naira, dollars. So I'm going to share my watch list with you. My watch list is mind-blowing. So even if you just take my watch list and begin to invest based on watch list.
Okay, sir.
you make a lot of money, okay? I'll share my watch list with you, my brother. Thank you. Any other question? So that we'll try and close. Oh, ladies and gentlemen, I'm excited. Any other question? No hand up? No, any other hand up? Oh, okay. I think any other one? Good question. Any other question? So, ladies and gentlemen, thank you so very much. In the absence of any question, may I draw the curtain and bring the year 2024 Global Retail Investor Summit to a close, to an end. Thank you so very much. Go out into the new year and make wealth. Thank you. I appreciate you. And thank you for your time. Thank you for your partnership. Thank you for your membership of our investment club. Thank you. Thank you. Thank you. Thank you so very much. All right. Thank you. So we have come to the end of the 2024 Global Retail Investor Summit. Thank you. Thank you, Tosin. Thank you. Thank you, everyone. Thank you. Thank you. Thanks for being part of this event. Hope to see you in the year 2025 by God's grace. Healthy, happier, richer. In Jesus' name. Amen. I pray for you. All right, guys. Thank you so much. Thank you. You're amazing. Thank you for attending. All right, bye.